Since no one wants to talk about their portfolio today, let's talk about the Tigers opening day. And I know Brent's going to see the Tigers. We could talk about that. In the meantime, we got to talk tariffs. China. China not happy. China fighting back. Will they be the first or the last? I don't know. But spring hopes eternal on pre-market prep. We got a rally going, folks. We're 75 handles off the low of the day. Maybe the low is in. We shall see. We'll talk about it with Joe Saluzzi at 8:35. We got a jobs number. We got Christian Fromhertz with the stats. We're ready to go on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, chart says it all. Got 157 handles, 25.75. The buck, taking a pause from that beating yesterday, just flat here at 101.79. Flight to quality. Hope you have a few bonds in your portfolio up to 10, even though they did nothing for a bunch of years at 93.96. Another $5.50 lower in the USO 66.70. Yikes. GLD flat 286.42. Silver getting smoked down over 2%. 28.23. And Bitcoin just hanging out. The futures are up $365 at 82,530. Stop the screen share. We're going to say a quick hello to Dennis. Dennis is in a permanent fast market over there. He's going to come and say hi to us, and we'll bring Christian on too. Gentlemen.
Yeah. Happy Friday.
It's not that happy if you're long stocks, but I mean, volatility can be your friend if you're a trader too. Lots of opportunity here. Wow, this is an 8% down move in the S&P in 2 days. This is incredible volatility, because it's in volatility. I don't know if we've ever seen this before, where you have an 8% down move because of something that we did. That's something that was intentionally done. Usually it's like a crisis, we had COVID, financial crisis. No, something we intentionally did knocked us down 8% 2 days. That's a first one for me.
You mean like a self-inflicted wound?
I would say this is self-inflicted, wouldn't you? I think it's kind of self-inflicted. I think so. Wow. I don't know. It's going to be interesting. Where do we go from here? The biggest question, does the Fed, with Powell speaking today, does he say something to get the markets excited that interest rate cuts, might be coming sooner than later? Does Trump back off a little bit, like in commentary? We know he's not going to take the tariffs away, but does he say, oh yeah, we'll work some deals? There's definitely some possibilities for us to bounce today. I'm not coming in here and sell all my stocks at this point in time. It's too late for that. We just will have 8% 2 days. So I think if you're long at this point in time, I'm riding it out a little bit. I don't know. What are your thoughts, Christian?
Well, I think that you've got a guy coming on at 11:25 that is really going to hold the key, I think, for today. His name is Jay. Jay Powell is going to be speaking at 11:25. And I think that, to see some of these names that are up this morning too, which are utilities that, are still green. So it becomes then, what are you going to buy? But I wanted to bring up, because we've seen a significant move, and this is where I mentioned Jay Powell's going to have to say something, because you got a huge move in Fed Fund futures this morning. The May meeting, they're now implying about a 50% chance of a Fed cut. This was at like 10% a couple days ago. The June meeting, you've got, it's actually like this has been moving all over the place. So to go along with everything else that's moving a lot this morning, but it was just pricing in about 100% chance that they cut interest rates in June, and that's moved down to about 90%. So this stuff is really bouncing around quite a bit. Yeah, that was the screenshot from, this was just like 10 minutes ago, and it's now moved to about 90%. So you got a lot of volatility happening in even things like Fed fund futures, which is pretty crazy to me.
Yeah, you just have to be careful that, the market could also interpret that as the Fed panicking too, right? And but yeah, Jay Powell, last few times he's on, we have we've had some rallies. In fact, that last meeting when we debated whether it was dovish versus hawkish versus dovish, and
Sure.
back and forth, and I didn't think it was dovish at all. The street interpreted that way, but that was 500 S&P points ago that
Or
we
more.
had other factors going on. But Christian, what this boils, I mean, do you think that? So you're looking at June then, huh? Perhaps I get a first interest rate cut now based on
I,
the current circumstances.
I don't know how they can't do it sooner. Like, I think holding on June is a long ways away. I mean,
Isn't it?
considering, like Dennis was just talking about, what did you say, 8% in 2 days or something? I mean,
Yeah, we're down 8% on the S&P in 2 days. That's probably one of the biggest 2-day down moves in history. It's got to be top 10. It's a huge move.
yeah. So you can't wait till June. June, like what happens by June? Like
Zero by June at this rate.
we're sitting here April 4th. No, they're gonna have to come in much sooner than that. Like, I mean, like over this weekend? If we don't hear anything new? What happens over this weekend? And there's another thing too. Like, there's an expression that markets don't bottom on a Friday. So, I mean, if he doesn't say anything meaningful today, what do you think is going to happen Monday morning?
Oh, I don't know what's going to happen at this point in time. Like the crystal ball is cloudy now. Like kind of predictable that, obviously after the tariffs hit, that we were going to continue to leak because it was just such. So I'm saying like on that news on 2 nights ago when he broke out the whole thing and we started selling off, I was like, very hesitant. I was like, not buying this dip. No, people were asking me like, I'm buying no stocks. I'm like, I said I would actually sell into rallies. I said that yesterday on the show. We just sold off another 300 S&P points since I said that. So I mean, at this point in time, I'm not selling stocks. We just dropped 8% in 2 days. I think it could be any piece of commentary could bounce us. Do I think I lighten up into a significant rally? I think everybody would want to lighten up. We got back to like 540 on SPY. I think everybody's lightening up. So people are worried. People are concerned. We don't know what's happening. But I just think like, what's Powell going to say to like bail this market out? He could say a lot of things. He could come on and interest rates, are imminent. We're talking about looking sooner than later. Any commentary like that, and the market would rip on it. But don't get your hopes up. This market's going to get all its losses back from the last 2 days on the Fed. That's not happening. This tariff plan is not going away anytime soon, and it's disrupting, the supply chains around the world. Not even disrupting, like blowing them up. So the world is a new place today than it was 2 days ago, and the market is pricing that in.
Would you have, you talk about not selling stuff, not buying stuff. How about the VIX here, Christian? I mean, you do get these pops here. I know you like to use this as an indicator here. Boy, slow, steady climb. With this VIX that, it goes and then it just gives it all back real quickly. Talk about what you're seeing from the VIX.
Well, I mean, that's no joke. I mean, the VIX going up to 45 pre-market. I think it's backed off a little bit here to 41, but like, what's the difference between 41 and 45 at this point? I mean, you're finally seeing, I think, some indication of fear. I think it's one of the things that's really been absent from this, like, from what we've seen over not just yesterday, but over the last couple weeks in terms of a move down. There really hasn't been, like, for me, some of the things that I just look at outside of the price action, like the equity put call ratio, has just been indicating a lot of complacency in this market. So this, I think, kind of sets the stage where, hey, now it feels like we've got a little bit of fear now in the market. The equity put call ratio, which is a big pain in the neck because it doesn't come out until like before I was going to bed last night, and I was like, I still don't have the equity put call ratio. They publish it. They used to publish it at like 8:00 at night. Now, for whatever reason, they publish it later, but that's now over So from yesterday's data, it finally clicked above 1, which means that they're going out and they're, now there's a lot more put, when people start reaching for puts, and that was the first hour of yesterday, by the way. I saw a
Yeah.
lot of puts go up in tech companies, and
Yeah.
even though stuff was down, that's like, to me, it's a great indication when they're now reaching for puts when the market's down 4 or 5%, is usually the fear that you need to start a bottom. And I say start because the fear, look at it this morning from yesterday. I mean, the VIX has hit 45 this morning. So it's the start of, oh my God, like I'm worried about the market. And I think we had a touch of that yesterday. And, that's why I look at these things, because people will tell you, you'll post something on Twitter and they'll be like, you don't know what you're talking about. There's a lot of fear in this market. And
Yeah.
so if you rely on some of these things that give you the hard numbers to say, okay, you may feel this way on a given day, but you got to look at the actual numbers to say, hey, is there really fear in this market? Or are you just feeling it because you're trapped with longs? Like if you're trapped with longs, you're like, oh
Yeah.
my God, I got a little bit of fear. But until you start to see people start reach for all kinds of puts, because they're like, it's the, oh no, like I screwed up, I got to buy some puts after a 5 or 6% move. That's sometimes when you goes through the evolution of fear and possibly getting to a short-term bottom.
And I
Yep.
remember this commercial, always Christian. It was on CNBC for the longest time, and the person looks down. He's on a date, and he looks down at his cell phone. He's like, "Oh, just give me a second. The market's way down. I've got to go put on some hedging trades."
Exactly. Right.
They like this is backwards. You hedge before the market goes down. It's no use hedging after the market goes down. There's nothing you can do. The market's already down. You think
Can I
there's
disagree a
market
little bit?
makers giving you hedges?
Those people that bought puts yesterday are looking okay today. Okay.
Yeah, that's a good point.
Yeah.
Right, but
A, a
go
hell of
ahead,
a lot
sorry.
better than the people that bought calls.
Totally.
So
Totally,
yep.
but we haven't seen it until now. Like we
Right.
haven't seen, we haven't seen that put activity versus the call activity. So people were not buying
Mhm.
calls yesterday. They were going out and saying, "Hey, I'm finally, buying puts." I mean, you could see by that number, it's been non-existent.
Right. Yep.
I don't want to say non-existent, but I mean, look at there's been other times where the spikes where people are just going out like crazy, because again, you have to think about this too. Once the VIX starts going up, right, and is now in the range of, 25, 30, 35, those puts are so much more expensive. So if by chance, like that, okay, something comes out or the market does bounce, right, those puts will go to zero like very quickly. You're not dealing with cheap puts. You're dealing with now expensive very, very expensive puts when you're buying
We're
puts
rallying hard here right now. Yeah,
at a VIX of 30. So
we just ripped up about 30 handles right there. I don't
Someone
know.
said something somewhere.
We're ripping right now.
Do we have Christian? If let's see, did we get through all of your Christian, or all the things that you wanted to see if there was anything else? Oh, you got the economic here, just the economic calendar for today. Boom, boom, boom. We have Powell speaking there, right? So
So
that's
Powell speaks at 11:25. We got the the jobs report. I don't know. I'll get your opinion, because I already have a strong opinion on this one. But are these jobs numbers going to matter at all at
I
coming
don't think so.
in 15 minutes?
If you're sitting back thinking the jobs number is going to bail you out of all your losses today, I think you're going to be very, disappointed. I think you're going to be very disappointed. So it could move 20, 30 handles on this. We're not getting back 150 points. The thing that would bail at this market is Trump comes out and says, "Oh, we're talking with China. No, we can work on something." Like, he needs to start talking about more of the deal aspect of this. That's what we need from Trump. Fed can help, but we really need Trump to start teetering or bending a little bit. Not this hard rah rah. We're gonna just blow up the whole world trade everywhere. I don't know. Supply chain gone. It's all this. And again, we're kind of like trying to formulate our thoughts, but this is new. I've been trading 26 years. I have professionally, like every single day. I've never seen somebody blow up the world supply chain. Never seen it before. So I don't know what that means. And I think money managers don't know what that means. And they're just selling first because they don't know how serious this is going to get, this trade war. But it got a lot more serious overnight. And that's why we're down here again.
Yeah, I think as far as the jobs number, we know it's also a little bit of a lagging indicator. It's just nothing, it's nothing going to be indicative. I mean, what about earnings? I mean, we're going to be coming up to earnings season. I mean, you think these companies are going to, beat and raise guidance?
That's who's raising guidance?
I don't
Who's
know.
coming out in this environment and saying, it looks great. Let's go.
I know who.
Who?
I know one company, Hormel.
Hormel Foods. Spam sells in depressions. Hormel was up yesterday again. Yeah, Hormel.
Yeah.
Yeah.
And a lot of utilities up this morning.
Again,
with the move in interest rates, that's tends to be what goes up. 30-year bond futures indicated up 1.5% this morning.
That's a little bit of good news. Now, boy, oh boy! So we've already had what a 225-point range, right? So half of that 125 would take us back into the 5,300 handle, 53.35. I mean, that's 50 handles away. Is that out of the realm of possibilities? No, but I mean, at least at this point, we are far enough off this pre-market low of 52.1050 that I don't know if there's anxious new longs out there. But man, if you've been trading the shorts or trading from the short side, I think the pre-market low will be protected. How's that? I don't think we're going to get back down to that area where we're going to stop in between. Then I don't know, but definitely getting some good price action. The interesting thing too, I mean, this isn't helping China at all.
No, China's crushed.
Yep.
Crushed. My emerging markets fund is murdered today. Yeah, there's no place to hide. Cash is the best place to hide in a trade war. I mean, cash and utilities apparently, and maybe some staples. Everything else, you think diversify around, it's ugly. I mean, Alibaba's back down at 117. Could you buy some of these stocks? Yeah. But there's a lot of unknowns here, and the market doesn't like uncertainty. I do think we're oversold. I do think we could bounce here. Like, I think the Fed could bounce us. I think there's a lot of catalysts for us to bounce. So if I was short stocks right now, and I have been short some stocks, I've been covering all morning, just trying to cover stocks, because I feel like, at one point in time we were down 3.5% on the S&Ps. We've come back from those lows a little bit, 1%, so 50 handles off the lows. But I mean, you're down 8% in 2 days. I mean, at a certain point in time, we're oversold, that we're due for a short-term bounce. I don't know if it's anything more than that, but I'm not pressing shorts at this point in time. I'm not putting on hedging trades at this point in time. So I'm a little bit bullish this morning. Like, I think we could bounce.
We've already did. I mean, we already have had a.
I mean, do you buy Amazon? Somebody asked in the chat, would I add my Amazon here? I mean, Amazon's in people are buying less stuff, like it's kind of, not ground zero, but it's not great. I'm down 6% on Amazon. You got a 10-year time horizon, trading 22 times probably now. Cheapest Amazon's ever been. The cheapest has ever been at 200, but now you just imploded it. Yeah. I mean, I already have a big position in Amazon, get killed in the long-term portfolio. If I didn't have any Amazon, might nibble on some today. There's a big level. Like, remember the first time I bought it was 160. That's gone all the way back to there. It was 151, the low from last year. So you got some levels you're coming into. But I think it's nibbling at this point in time, not like, oh yeah, this is the bottom. We're not trying to call bottoms here.
Let's see, what is the next daily low here? 170, 116. We're below that, and then I don't know what was this day. This was whatchamacallit day. This was Deep Seek Day. On Deep Seek
Yeah.
Day, it took it down to 151.61. I will make an official prediction on the show today that we will not see the 151.61. But I get this for for shorter term trades and for things. Obviously, you want to look at what the pre-market lows are. See if there's any confluence with any daily, weekly, or monthly levels, and then and then you could pretty easily use the bottom of yesterday's range as resistance. And if you're trading aggressively off the open, if there's some orders out there flat, but I doubt there are any out there. I'm sure Dennis knocked all those out last night, or other pre-market or after hours or pre-market traders knocked them out. But boy, we're gonna have to hunt up our bullish crew, man, because we've had some bullish people on. We've had Craig Johnson on. We've had Ryan Dietrich on. I mean, I
Yeah.
tried to
think
go toe
so.
to toe with
Try
Craig
to
a
try
little
to
bit.
pick us up a little bit. Christian's got a hop, so I want to get Christian's closing thoughts here. I mean,
Okay.
Christian, crazy day. We saw off 8% in 2 days. How do you approach today? What are you doing over there?
Lightly, very, very lightly, because this is also something that folks don't generally think about when the VIX is up at 40, 45, is that stocks are going to move much, much faster than they normally do. So that means that volatility increase means that you don't need the same size position that
Mm-hmm.
when you were dealing with a VIX of a 20. You actually need about half the size position, because the volatility is going to move your risk so much faster. So
Yeah.
if you're thinking about doing that, make sure that you're adjusting to what this market is telling you, because the volatility is now, I mean, 40 VIX is no joke. So would I buy vol here? No, I would not. And that's the same thing as, like, essentially buying puts in S&P. No, I wouldn't be buying puts in S&P today, because number one, the volatility is that expensive. I mean, I actually like Amazon. I have a level of support at 165, so I like that idea, and I think dipping your toe in some things today, it does make sense to me. I would also think about you know that in a bear market, which I think that we're in now,
Yeah.
your bear market rallies can be very severe. They can be very, very big um, in bear markets. You could get some of your biggest rallies in a bear market, but you've got to know as well when to hit the exit, because the trend is still down. And I'm with Dennis. I think that we could bounce. I think if Powell really comes out, I don't think this job number is going to matter too much in 5 minutes. I think really, what if Powell comes out and he really changes his tone, you're going to need that before a weekend. So that's what I would be watching. And still, if you're buying something, I would still have your exit point to say, okay, this didn't work, let me get out of it and reassess. So but
And also, if on the contrary, if you are taking a position and it's going your way, pick a spot, because the market's looking for liquidity. And if you have a firm target and a firm risk reward ratio, order execution. I mean, right, wrong, or indifferent, let's say you scoop this up at 167 on the open and you want to get out at 170, you know, risking a buck and a half, put your order out there. I
Have
mean,
your orders
because
out there. You're getting filled on stuff right now. Like, that's what I've been doing all morning. I just get my orders out there, and you're getting fills. Like,
and
you're just like bang, filled, bang, filled. Like, this trading going so rapidly. You want to get
Mhm.
out, get your orders out there. You're getting filled right now. You're getting fills.
and
Yeah.
I was just going to say one last thing before I go. Oh, by the way,
Yeah.
thank you for the Spinner says the BJ Wholesalers, which is hitting a new highs. That's the name I've been talking about.
Oh, great.
But also, it depends on your time frame. And Dennis this makes a great point too. Like he talks about long-term versus short-term. When we're talking about those stops and exits, like that's of course short-term trading. But for
Yeah.
long-term, like this might be something where, as you normally do, like if you've got a 401k plan, you're dollar cost averaging over time. So that's a whole nother thing. Like long-term, this might be some great stuff for you today. So
Hey,
guys, good luck.
Christian,
Yes.
just stick around just one more second. Two things. One, of course, everyone's really always interested in options, and today on the Stock Trader Network, CC Legator is going to come on at
Awesome.
1:30.
Nice.
Yeah, to talk about options, and we got a special treat for you coming next week on the Stock Trader Network. Christian's going to be helping us out here in the afternoon. Christian's Corner. Just giving his analysis, or me, and I'll be on with him, or Brent. But the mornings are busy for him. He's still going to be helping us out in the mornings. But we're trying to stock up the content on the Stock Trader Network. So get out there and get your free trial. And man, if these are the time of the markets where, yeah, it hurts your
Yeah,
portfolio. But you can also learn, man. This is a learning experience.
it
Dennis and
is.
I are still learning. So
Always.
we want to learn with you and help you along your investing and trading journey, because it ain't easy, and it ain't easy for everyone. So thanks, Christian. Have a nice, relaxing weekend. And Dennis, I know you want
You too, guys. Take care.
uh, you want to get ready for the
Yeah,
jobs number.
I'll stay on video. Brent's gonna hop on with us to cover the number. We'll add Brent to the
Okay.
stage here. I'm still here too. These are my craziest trading days. Like this is like when the VIX is up here, this is when my strategies excel. So, this is like so far so good today. My overnights were really good. I'm on track to have my best day of the year here. I know people are like, "Oh my gosh, what are you talking about?" Well, my long-term account's down, so it's not happening. But my trading account, I'm on track to have my best day of the year here. I don't know if it's going to close out there. I still have a lot of positions on overnight. But I mean, when the VIX is elevated, my strategies work really well. So, and if you want to learn more about that, that's on the STN network. But Brentster, come on in.
Okay, what do we have here? What I'm doing, I'm gonna mix things up a little bit. I'm gonna get this. We'll make this yellow. We'll make this the TLT, the truth indicator. Boom. So we got it. We got to get the pre-market action in here as well. Boom. Here we go. Uh, just a few minutes away. Is that do we have the Brentster? You got a preview for it?
Yeah.
Brentster.
Month of March, non-farm payrolls, 137,000 jobs. Private sector payrolls, we're looking for 127,000 jobs, just a 10,000 job difference there. Unemployment rate is expected to be unchanged at 4.1%. Standing by for data. I'll break in when I see that.
Okay. Okay, we have the S&Ps on the left here. We have the TLT on the right. I did take a look. Yep.
We got a big number here. Non-farm payrolls, 228,000, almost 100,000 jobs added in March. Private sector, 100,000 jobs more than the estimate. Private sector payrolls, 209,000 jobs. Estimate was for 127,000 jobs. Unemployment rate does tick a tenth higher here, 4.2%. Economists were looking for an unchanged reading of 4.1%. We do have other sectors that come out with this jobs data, but the non-farm numbers and the private sector numbers are the ones that traders and investors care about. What's the reaction in the market, Joel?
The remark. So far so good. A little bit of anticipation leading long into it as we saw the buyers. We got into the 5,300 handle. Haven't been able to establish a bid there yet. But 100-point rally off the low, starting to fade a little bit. TLT really doesn't seem phased by this too much. It's still up 228. I think what you're having here is two things. One is anybody that, first of all, people are like, well, that's last month. That's before the world was supply chains. The world was changed upside down. So what's next month going to look like, or what's the following month going to look like? That's number one. And number two, as I mentioned before, people that bought the dip here this morning that just blindly bought it, are just saying, hey, you know what, 100-point rally in the S&Ps, my stock's moving up. I could care less what happens in the regular session, and they're selling out into it. So with as I said, a 225 point, right, 225, 112. So that would take you to 53.32. So I think it really just for the day's perspective until we get back to that 53.32. Bears are still so in control in this session, but really not far away from that. TLT takes down just a little bit. I mean, if you're wanting Mr. Powell to, say some dovish things, I don't know if that's exactly the data that's going to give him, the fodder to do that. But so far, the other thing I like to check, for a determination, where did we S&Ps close at 8:30? The last tick was at 52.90, and we're basically at 52.90. So a little chop, a little up move. It was sold. I think it's going to be symptomatic of a lot of the trading action that you're going to see today. Dennis, any corresponding moves in the equities? Are you still busy banging it out? I think he's still busy. Okay. I see Mr. Saluzzi here in the background. So why don't we bring Joe on, get started with that, and I'm sure Dennis will be popping on with some comments from the markets, and I know he loves talking to Mr. Saluzzi. Joe,
Looking.
Themis Trading.
All
How
right.
you doing, Joe?
I'm great. What a day, huh? Look at this day we've got today. Dennis is over there banging on the keys. This is all right.
Yeah, trying to do a live show and trade at the same time because there's just so much movement here. Joe, I just start. What are your clients saying? I mean, we get an 8% sell off in 2 days. Is there panic? Is there calm? Is there uncertainty? What's the institutional client saying right now?
Yeah, I mean, uncertainty is the word. I think it's definitely not. We haven't seen panic. We haven't seen anything like 2007, 2008. I remember those days, vividly, as you guys probably do as well. But it's not like that. But certainly concern and uncertainty are the words, and that makes people hesitant to do things. I think, I think what we saw yesterday, we're such a small subset, but we definitely saw some people nibbling on value positions and getting things that they like, stocks that they know, and that'll just get caught up in the everything. As you guys know, everything trades together. So it's going to go down. But if you see something you like, go ahead and nibble on it. But I think the uncertainty is a problem. I mean, we all knew this was coming. We didn't know it was coming like this. And then when we saw the actual way numbers were calculated, not only was it uncertain, it was like, well, this is kind of, unprofessional, shall we call it, in the numbers and how they're doing it. So people are concerned about that.
It didn't look like, and again, last minute, like we heard that it was going to be 10% across the board, and the Wall Street Journal came out with that, and then we're like, oh, this isn't bad at all, and the market rallied on it. But then he came out with a little board, and this math that he did to calculate this tariff rate that they're charging, and it kind of came off that he almost didn't look like he didn't know what he was doing. And that's probably.
I agree. That's why I'm saying unprofessional. And I think the whole calculation, when people started digging into it, looking at the formula, saying, wait a second, this has nothing to do with tariffs. This is a trade deficit. And then it's divided by 2. So that to me is not a serious thing. And you don't want to hear that. You don't want to hear as an investor, you're being told something that's not serious. But that's why I think there's a lot of movement here. There's a lot of room to go. This is the first lob, right? The first volley. We see what China did this morning. Who knows what's going to happen over the weekend? And I think that's really what the problem with the market is. We don't know what's going to happen in the next 20 minutes. Whether it's a tweet, whether we just had the unemployment numbers, we got Powell later this morning, and then who knows? At any moment, at any point in the day, or any point in the overnight, you're going to get a tweet or a statement. It's going to change everything. So it's really hard to have conviction. Dennis, I know you're having fun here this morning with this market, but it is tough. It is tough to trade. As a short-term trader, I don't envy you guys.
It's like headline driven, and you got to have the Trump Twitter account and the Trump, his other social media platform there. I mean, you got to be watching on TV if he says something over here. I've never seen a market and you've been trading a long time too, Joe. I've been trading professionally for 26 years. I've never seen a market so dependent on what the president's going to say next. Like, it's just like we're all waiting for the next headline. This is like the most headline driven market that I can remember. Like, do you remember headline? Maybe during the financial crisis, maybe we're forgetting,
Yes.
the next headline. It kind of
Yeah.
feels like that though. Like we're waiting for the next headline.
Exactly like the financial crisis. And remember TARP? Remember the TARP vote?
Yeah.
We were watching the TARP vote on TV, and it went the wrong way at first. The market tanked, and we're like, "What the hell's going on?" But every, how many bank failures? Every time there'd be another bank failure, and the markets were just like that. And you get these massive moves up and down throughout the day, and it lasted longer than we thought. It was months, years, right, of real pain. And people remember that who were there. It was a vivid. It hurt, right? It hurt real hard. And I'm hoping that this is not something similar to that, where it's going to take months and months to really get this thing, sorted out. But it looks like it is going to be that way. It looks like it's going to take us a while to sort this out, which means we're going to have volatility. We're going to have headline movements, and it's going to be tough for a while.
Do you think there's any chance that Trump just says one? And I'm going to let Joel go, but do you think there's any chance that Trump just looks at the market down 8% in 2 days and saying to himself, maybe I screwed up and maybe I need to just talk the market up a little bit? Do you think there's that possibility?
No, he will never, ever. Yeah, I mean, I think one of the rules from the art of the deal for Trump is always declare victory, never admit defeat. Okay, that will not happen. Now you can massage it. It is. He can massage it and work. He is going to work a deal. There'll be something to be done here. And you may get some positive news, but we're in a situation now. It's going to take time. I think it's going to really. We'll see how this thing ends up, but I don't think it's going to be over for a while.
From a market structure standpoint, I mean, I think up to this point, you're trading big orders. You're out there in the market. I mean, and even though we're coming up from much higher levels than we did, like during COVID and everything, but we haven't hit any 5% circuit breakers yet, at least in the S&P. We have in the individual stocks, but comment just on, I mean, it's been orderly. I mean, and so the people that are looking for capitulation and that actual crazy sell off and boom, and that's the bottom. All the sell stops are out. We haven't seen that yet.
No, and you're right. It has been orderly, and that VIX spike that we saw earlier. What is it at now? It was over 45 this morning, and that kind of reminds me of that VIX spike from last year when it went up to like 80 at 7 a.m, and nobody saw that. Like, how'd that happen? And then it collapsed. So you do get markets that don't have liquidity buffers, right? Back in the old days, there were liquidity buffers. There were true limit orders. There were real buyers and sellers. Now you've got all machines just chasing each other throughout the day.
Yeah.
There's no limit orders on the book of decent size, of any size. So you can cut through really quickly if there's a sell-off, right? And same thing to the other side. You can really bounce back pretty quickly. That's just the way the market is now, right? And as much as I can complain about the machines, and I will complain about the machines, the market is structured in a fragmented and segmented way where liquidity drains immediately. And all of a sudden comes back immediately within nanoseconds. And that causes volatility. And that's the way we are. And you have to be careful as a day trader or as a short-term trader not to get caught in those liquidity vacuums.
Well, that's it. And you see it even, on economic numbers. We see this, not just in these events, like, when they're hiring for a jobs number, everybody goes wide and then it comes back in when it's safe. And I mean, this is the issue that we've talked about, me and you, Joe, forever, is that the liquidity is all made up of the same type of participant. It's all short-term, high-frequency traders. That's the majority of market's liquidity. I mean, we used to get, like, when we started, like when I started back in '99, you had institutional orders on the book. You had, like, a diverse order book, and you just don't have that anymore. So when you get, material news, you tank so fast. Like, it's like the algos are so quick. It's like it's instantaneously down, where before it would take time. Like, is the speed of the market just like how do you navigate this? And you're a human trader. How do you navigate the speed of the market in these events?
Well, like you said, it is so quick. And part of the other problem is that over half of the volume now is done off exchange. So we've got 16 active current exchanges. Actually, 2 more have just been approved. There's 18. So you have this fragmented maze of liquidity on the on exchange side. And then you've got dozens of ATSs or alternative trading systems and segmented venues within those alternative trading systems that have over 50% of the volume. So it, like to your point on the limit orders, they're gone. There's nothing deep on the book. There are no limit books out there. And if you are putting a limit order in, the stock exchanges are selling you data so that the HFTs can see where you are. So you're trapped either way. It's a really terrible market structure. It's been terrible for a long time. People will claim that we have the deepest, most liquid markets in the world. How's that working out? Okay, it is what it is. It's very frustrating for me. And like you said, Dennis, we've been talking about it for years, and we get no action from the regulators. The industry is extremely powerful with their lawyers and their lobbyists, and they keep things just the way they want it, and they've got it just perfect for the way they can make money.
You know what the cure to all this is, Joe? 24/7 equity market trading.
Imagine what was going on last night in the overnight on there's one ATS called Blue Ocean. I didn't check their numbers this morning, and they will trade from 8 p.m. to 4 a.m. And I can't imagine what the spreads must have looked like in the overnight and what was going on there. And listen, my personal opinion, we don't need overnight trading. Okay, we have this, again, it's the industry that is pushing it. There are lots of people that want 24-hour, 24/7 equity trading. They said, well, it's good for the crypto market. It's good for the equity market. No, equities are not cryptos. Okay, equities are shares of corporations that, based on current valuations and discounted cash flow, we can go all the measures. Okay, we can figure out what an equity is supposed to be worth. Not unlike a crypto, which is just basically a casino chip. But they want these things traded overnight. They want Asian market makers making markets to hyperactive day traders at 2 a.m. They want you to wake up to an alert on your phone that says, hey, XYZ is trading up 10%. Wake up and trade. Okay. No, you don't need to wake up and trade. There's nothing going on because it's going to revert the next day anyway. So my point is, no one's asking. And on our side of the business, on the institutional side, we have yet to find one institutional client that is even vaguely interested in this. They have no interest in overnight trading. In fact, some people have said we should shrink the trading hour days because of the way the liquidity kind of barbells in the morning and in the afternoon, which is most of the liquidity. So this is something that they will tell you it's inevitable. It's inevitable. It's going to happen. So get on board. And I'll tell you this. No, it's not inevitable. Not everybody is asking for this. And there's lots of issues that need to be hammered out. The SIP, which is the Security Information Processor, which shows all the data, that needs to be updated. The limit up down bands, how are we going to handle that? How are you going to handle the order protection rule when after in the overnight hours? There's a lot of things that need to be discussed still. So it's going to take time for them. They are going to push it. You're going to hear 24/7 trading for the next year.
Yeah.
And maybe it gets done. But I would say caveat emptor, right? Buyer beware. Be careful on this one.
Joe, just wanted to ask you, and I don't know if I've asked this before, what do you think of these double leveraged single stocks, where you've got like TSLL, which is the double Tesla bull, and then you've got the GGLL, and it's the double Google bull, and these things popping up like just nonstop. There's more and more and more of them, derivatives of stocks. And I don't totally understand, like, what's the necessary reason to have a double bull, TSLL? Why don't you just buy twice as much Tesla? I don't understand even the purpose of a double bull thing, except to get around margin requirements.
Yeah, I think that's it. It's to get around margin. If you've already maxed out your margin and you're trying to get more leverage in there, they're dangerous. They're little time bombs sitting in your portfolio. Certainly, they're more for an active day trader, intraday position type of situation where there might be some value if you have it as part of a bigger strategy. But if you're sitting there and you're going to be long a double, whatever stock it is, you're subject to massive risk on those things. I don't understand it either. I don't know why anybody would do it. If you have that much action and you need that much action, go to a casino. The stock market's not a casino, but if you want to treat it like one, well, then you deserve what happens to you.
And then one more, just, in regards to regulation here, because obviously with Gary Gensler here a long time, he had a lot of, he wanted to do a lot of things. He just couldn't get anything done, probably because of the lobbyists that you talked about before. But now you get Trump, who is more about deregulation and about free markets. So what do you anticipate, staying away from like this tariff stuff, but from a market structure perspective, is there going to be any changes at all coming now, with the Trump administration coming in here and all about deregulation? Does it get like more Wild West?
Yeah, what's interesting is that while we wait for Paul Atkins to be fully appointed, which he went through his confirmation hearing as the SEC chair last week, and we fully expect that to happen, the interim chair, Mark Ueda, has been out there basically dismantling lots of cases that are out there, particularly in the crypto world. The Coinbase case, all sorts of different cases have been dismissed. So they are pulling back, to answer your question, pulling back from what they call regulation by enforcement, which is a big issue that the crypto people have. Whether or not you agree with that, when it comes to market structure issues, they're also pulling back. For instance, the consolidated audit trail, which I think was a great tool that the SEC finally built after 15 years from the flash crash. That's when it was conceived, by the way, in 2010. The SEC just removed critical customer information from the consolidated audit trail, and they claimed that it was potentially hackable. Well, first of all, if you're the government, you should build something that's not hackable that easy. And really, you need that information to help you identify when there's problems, manipulation in the market. You have to surveil that. And they basically put handcuffs on themselves now in this new tool, which costs billions to build, and which I pay for, which every broker still pays for every month. And they've neutered it. That's the big joke on the street. Oh, they neutered the cat. Okay, but this is a bad thing. So I'm concerned. I'm very concerned that they're pulling back on some of the very important rules, and as well as market structure proposals that were still outstanding. They're going nowhere. They've already been shelved. So it's disheartening for a guy like me who wants more regulation. I want targeted enforcement. I want targeted regulation.
Yeah.
I want changes to the market structure. And unfortunately, none of that seems like it's going to happen.
All right, Joe Saluzzi, partner and co-founder of Themis Trading, co-author of Broken Markets. If you want to get that book, you'd read a little bit about Dennis in there. Joe, we always enjoy having you on, talk market structure and put a little calm in a crazy market. So we'll be dialing you up again real soon. Joe, thanks a lot.
You got it. Thanks, guys. Have a good day.
Thanks, Bill.
All right, continuing with our regularly scheduled program.
Chop.
Yep.
I'm still in the camp though, and I know like people are panicking in the streets here, but I'm kind of in the camp at this point now that I think Powell could say something that could pop the markets. I'm with Christian here. So I'm actually been buying dips, like not getting fully long here, but covering shorts. I'm still short some stocks. I'm covering in. I don't know, like in my long-term portfolio, am I going to nibble into some stuff? Maybe. I'm 35% cash in my long-term portfolio. I'd like to get that down to 20. So I need 15%. I need to expend, 15% of my portfolio from cash to stocks at some point in time. Stocks are on sale right now. I think you got to be just cautious, though, that you're not trying to be a hero. So if I'm doing any purchasing, it's probably nibbling at this point in time. Just nibbling in a little bit here, a little bit there. So, you dip your toe in the water and you hope the piranha doesn't bite it off. I mean, that's from the long-term perspective. From a trading perspective, just buying dips, selling reps all over the place. Ding, 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 ding. I've been doing it all morning. We rip down, IWM keeps bouncing in this 181 area, 181 and a half, and it pops up a little bit and it comes down a little bit. I mean, we're really choppy this morning. So just trying to play the chop a little bit.
Yeah, a little bit of a reprieve here from the jobs number, right? That came out. I like that little dip there that we had. It came back, got it down to what 50, 52.60 and popping again. So the longer this persists, I mean, like I said, when we had made that 52.10 low, moving 100 points off that, I thought you'd find buyers on the pullbacks, but still a lot of things to happen here in this session. But we got to talk about some of the stocks that are just most affected by this. And
Sure.
when I saw that that move in Apple yesterday, I mean that was people just throwing in the towel. I mean this is probably going to be the worst 2 days for Apple that I can even remember. 225 earlier in the week, and now we're trading at the lower in the 193 handle. I mean, we've heard different things. I've heard, well, it could add a couple $100 to an iPhone, and then you hear it could add 30, make it as high as 3,500. It's going to take a ton of time to, get these factories up and going. These expensive factories are going to have to build, and then you're going to have to find people to work them. So boy, Apple, Dennis, I know you've been wary of the valuation of it for a long time. Now valuation is probably coming in, but the earnings are probably going to come in too
Yeah.
as well.
That Apple's probably no touch for me just at this point in time. So again, I don't know. One, I never liked the valuation. That's why I sold it back at like 180 a while ago. I thought it was overvalued, but it's continuing to go up just in the story. But now you're disrupting the supply chain so fiercely. I mean, Dan Ives came out, yesterday just saying it's basically impossible for Apple to come over and start building iPhones in the USA. He estimated that an iPhone that's currently $1,000 would go up to $3,500. That's Dan Ives, who's very connected to Apple. Obviously knows Tim Cook. He's in there. I trust his numbers. He's obviously still bullish. He thinks that the tariffs are going to, he thinks there's going to be some type of deals, and it's going to start to obviously, not be the talk every single day. So he's still staying in the bullish camp for Apple. But I don't know, like the supply chains. This is what this is the unknown here, folks. And Apple's a great example of it all. Is we've seen supply chain disruptions in the past. We've seen, remember the boat, the big ship that was caught in the Suez Canal for like 4 or 5 days. And remember the market's getting crushed because of that disruption. I have never in my life seen the supply chain blown up. And that's what just happened. This is Suez Canal times 100. So what does that mean for stocks? It can't be good. So that's why I'm like not backing up the truck and saying, oh, we're making all-time highs by the end of the year. The out is that Trump backs down and we get deals, and then we can rebuild the supply chain. And maybe he sees the light that this was just a really bad idea. But if he sticks to those tariffs for 3.5 years, this S&P, and this is all scenario, if he sticks and says no deal, no deal, no deal, they're going to stay in here for 3.5 years, the remainder. Stocks will be a lot lower. That's my opinion. So I think he's going to eventually do some deals as the market comes down. So I'm not in the camp that I'm selling everything. I do think there's going to be some deals. But why do I want to jump ahead and try to just, say, okay, wait, is there going to be a short-term bounce or short-term day trading bounce? Sure. It's happening right now. But I can't just load up my long-term portfolio here with so much unknowns. Like the supply chain was assassinated. That's what happened here. Apple's whole business is like now questionable. How are they going to, work around these tariffs? Their margins will get just compressed down to nothing. Inflation comes back. There's like, there's so many repercussions here that we're just not even considering. I mean, this is what I was tweeting out, at Foxconn. So the Foxconn workers over there in Asia that manufacture for the iPhone, manufacture for Apple, make $2.90 an hour. We were talking this on the STN room. Like, what are they going to want, if they're making these, in the USA? What's the average worker going to want, Joel? And this is some like some of this is skilled labor in there too. What are they going to want? 30, 40, 50 conservatively an hour? That's where this $3,500 number comes from. So are you prepared for your iPhone to go from $1,000 to $3,500? And that's not just Apple. That's a million things that we're producing here. Are we prepared for those kind of price hikes? Because that's what has to happen, because these companies are not going to operate at losses, folks. I'm sorry. Apple is still a business. They're not going to sit here and just lose money. They will have to pass those costs on to the consumer if they start producing over here. So that's the question. That's the biggest question, is how does this all resolve itself? I think it resolves itself if we get some deals. Deals, market goes up. No deal, market continues to leak. That's where I'm at right now.
It's so funny. I just looking at the chat here, and I had some thoughts here, and sure enough, a couple of you have thinking about it in the chat. What about robots? Robots building the new Apple iPhones.
Maybe.
The whole AI thing.
What does that mean for, if Trump wants to bring back manufacturing, bring back all these manufacturing jobs, the whole humanoid aspect of it is a great point. I mean, those jobs probably, that's what they're going to look into. So maybe you got to keep looking at the humanoid aspect of it, because that's the workaround. More robotics, less jobs, folks.
Yeah.
They build these big factories, all robotics in there.
Oh,
Trump
of
think of that?
course.
He's
Yes.
got Musk sitting there building a humanoid army. I mean, is he thinking about that? Because you could build these factories over here and probably work for $2.80. These humanoids are going to work for nothing, just energy. So yeah, so maybe it could be done, but it's not going to bring manufacturing jobs here. Sorry,
Yeah.
that's the
Yep.
problem too.
Yep. Kevin points out manufacturing will come back, but the jobs won't.
Yep, there you go. That's the workaround. Humanoids. Start investing in humanoids. I don't know if Tesla's the way. There's a million companies working on humanoids now. Maybe Tesla's the way, but that might be the workaround here. If these and again, the problem is the humanoids are probably more than really useful. We're going to get some factory workers next year, but I mean really useful, like to do details of building iPhones and stuff, like and figuring all this stuff out. Like there's some robotics in there already. Don't kid yourself. But to go full robotics, we're probably more than 3.5 years away, and then maybe Trump's, it's over. So there's a lot of things to think about here. These are the things that money managers are thinking about right now, folks. These are the things that everybody is thinking about here right now. These are the things why the S&P dropped 8% in 2 days. Because those manufacturing jobs are probably not coming back no matter what happens. That's the bottom line. Humanoids probably take those jobs. If we own a manufacturer, sure, we'll build it all in the US, but we're going to have humanoids doing it because they'll work really cheap.
Yeah, and it's true. It's going to take a while, and it's a ways away. But I mean, how long is it going to take to build these factories, right?
The factories are 3 to 4 years. Money Mitch, I'm agreeing with you 100%. Money Mitch, I believe, is going to be coming on the SDN network today. I agree with Money Mitch here. I mean, this is years out. So humanoids are years out too. Factories are years out. Most of this stuff, this manufacturing boom, would happen after Trump's 4 years is over because they just can't do it that fast. So there's some suffering here in the meantime. And I think at the end result here is these manufacturing jobs are going robotic no matter what. You're very much going to really put, you're going to be really pushing for robotics if you got to pay $50, $60 an hour. If you're replacing a Foxconn worker making $2.90 an hour, you're not pushing for those robotics that much because it's not saving that much in labor. But as we start to try to bring labor back here, or being forced to bring labor back here, robotics becomes a big part of the equation. So I think you are looking into robotics investments here, but this is just not the market environment that they're being kind to robotics companies either. And there's not a lot of public ones out there. You got, Hyundai's, but, Tesla, there's, just not a lot of great, like NVIDIA, maybe you're thinking NVIDIA, maybe it's not a bad idea here. Thinking about NVIDIA, I mean, it's coming down. It's $98 here now. 91's a huge support. So maybe you're thinking about those stocks. Probably, that's probably one I would buy. NVIDIA coming back down. Let's get it down to 91. Maybe that was where that old low was in July. Maybe you're striking there. I mean, I sold majority of my stock at 130. So would I reload it all at 91? Maybe.
Also, one thing, a big unknown too is the, companies that are doing it, like Apple. Are they going to be getting, some kind of breaks, from the U.S. government if, in fact, they're, building the factories over here, tax incentives or whatnot. So that's something else that that you have to take into consideration.
Yeah.
Well, I don't think I've ever been happier with the